Hi, this is Mani from BSE to NSE.com. So in this video we are going to talk about relative strength index, which is nothing but a technical indicator, how it can be used and so on. And before we proceed, I just want to say one thing. Subscribe to our YouTube channel if you like our videos, and more videos on trading strategies will keep coming from our side. Now coming back to relative strength index, it's basically a momentum based indicator, and if you look at the mathematical formula in Wikipedia, it's mostly looking to identify an uptrend and a downtrend, or an upward momentum getting picked up, basically based on higher highs and lower lows, and so on. So as you can see, when you're looking at the RSI, you need to understand that it's a momentum based indicator, and it's an indicator wherein the number will vary between 0 to 100. So any number so closer to 100, or a number at the higher side, indicates a higher momentum in the particular period. And typically the default value that is used is 14. Let me just put it down here. Default period is 14, meaning if I'm looking at the daily chart, it means that it takes into account the movement in the last 14 days, right? So basically you can I'll show the charts after I finish this initial introduction. So a falling RSI indicates that the market is turning into a downtrend, or the momentum is turning into a downward momentum. A rising RSI indicates an upward movement or an upward momentum. Now again, this downward and upward momentum can be like a pullback or an actual trend that's getting formed. So that you need to be able to judge looking at the chart. I'll show that again just in a couple of minutes. And typically when I look at the RSI chart, I look for markets to fall down, and then followed by RSI also falling down to something like 20, and it needs to pull back. The RSI needs to pull back from 20 to close to 60 or above. So that is a good indicator of a reversal, or a beginning of a rally, a beginning stages of a rally. Not exactly the exact start point, but a smart investor or a trader can just look to go long once the markets have fallen down and RSI has picked up from 20 to above 60. So just when it's crossing 60, at that time you can look to enter into a fresh long and keep holding. For stop loss, you need to follow some other mechanisms. And similarly, to predict the start of a bearish fall, I would wait for markets to peak out and RSI to stay at 80 at least for some period, and then the RSI needs to reverse and start falling from 80 and breach below 40. So because sometimes you'll see RSI falling from 80 to 70, 60, and then again bounce back from that to again continue the high momentum on the upside, and markets will still continue to rally. So for you to predict a start of a bearish fall, you need to wait for markets to fall, the RSI to fall from 80 to 40. And once it's below 40, that's when a smart trader will look to go short. Otherwise, you could get into trouble with a lot of false signals and so on. Even with these two rules, you probably just can increase your possibility of success a lot more rather than just trading blindly. Okay, so let's now move on to the chart. Enough of this theory. So I look to show you on the chart here. Okay, so here you can see, right, this is a nifty chart with the RSI at the bottom and you can see here RSI between 0 to 100, the top right bottom here, 0 to 100, and then Nifty here, you can see it fluctuating between 59 to 6700. This is a 3-month chart, and each candlestick represents 1 day, and you can see that the RSI here has stayed at 80 for the last couple of months. And before that, you can see that when markets were falling, let me try to draw some parallel lines here. You can see a downtrend. I mean, of course, this is, we are able to predict or look at this. I'm able to draw this downtrend after the markets. I mean, after we see the markets moving in the last 3 months. And again, let me draw an uptrend here. Correct. So this let me like put an arrow marker, right? So which kind of tells you like this is an upward movement here, and here we had a downward movement a couple of months before that. Correct. So basically, while the markets are moving lower here, you can see that the RSI has fallen here, and it's settling down at 80, meaning like consolidating around 20 for a few days, and then it begins an uptrend wherein here it crosses 60. So again, you can see the change in momentum here clearly in the RSI, which indicates a reversal in the markets. And as a smart trader, what I look to do is, you can see here 50, the center line here. So you can see I would look to go long in the market somewhere here, right, somewhere here, when Nifty is at 6100. When historically you can see that it has fallen from 60, 70, and before that markets were on a peak, and at 6350 it fell down to 6000. You can see the RSI settling down at 20. It has settled down for close to 10 days, and then it has picked up. And the market momentum, it has started creating new highs and higher highs actually, and the RSI moves rapidly on the upside and crosses 60 here. And then you can see that it's sustaining the upward momentum. The RSI is not falling here, and it's keeping the buying momentum that's happening in the markets, and it's slowly moving towards 80. And here you can see that it's sustaining at 80, and you can see that even while it's sustaining at 80, you can see that the markets are still creating fresh highs, and the markets is still going up. That is because the higher it just indicates that because you can get the doubt wherein the RSI is actually not increasing, but markets are actually increasing, which pretty much indicates the end of a rally. For example, the rally that you can see, let me mark it here, the rally that you see here, right? So this is not the start of a rally. So markets have already been in a positive momentum, and since it is sticking to the positive momentum, you do not see a change in RSI. So now now that markets have rallied a lot in the last couple of months, I'll wait for this RSI to dip below 40 somewhere here. I'll draw my negative lines here. I'll wait for this level 40 to get breached in RSI. For RSI to, I'll wait for this RSI line. Let me just draw a line here. Correct. For this 80 to slowly like trickle down like this and this. If it does dip below 40, then that is the time I look to go short. And until then, I'll just wait for that opportunity to come by. Now this is again at a positional level. You can apply this at intraday level. You can apply this on a weekly chart. So you can do many things with RSI. And again, like I said, you can watch my other videos on candlestick analysis, wherein I give enough emphasis on doji. And for reversal, for market reversals, you can see that you have a doji pattern here. you have other dojis getting formed, and then followed by a market uptrend. So you can see a doji here, and then markets creating going on the upper side, and then again breaking out here, so which indicates the start of a reversal. And you also have indicator at the RSI level. So RSI is again, you'll need to couple that with Bollinger Bands. Bollinger Bands is exceedingly good. Candlestick analysis with doji patterns is exceedingly good. So combine all of these to make your decisions to buy or to go long or to go short. And any queries, any questions, feel free to post in this video. And just know that we are giving free training on trading strategies for clients who are willing to join us at Zerodha. So if you're interested, log on to bse2nse.com, fill out the form to join Zerodha through bse2nse.com, and we are an authorized person for Zerodha. So that's it for now. Subscribe to our YouTube channel and stay in touch. Thank you. Bye bye.